Hi there, welcome to Kneppy Invest. Forecasting or predicting the future is hard to do. And I should know, in my professional life, I am forecasting the weather, and most of my forecasts are only for the next 24 hours. And even then, sometimes we are wrong. Most of the times we are right, but sometimes we are wrong. And in fact, about 1 year ago, I did a video on my forecast for 2022. And without even looking at that video and all the forecasts I made, I'm going to be about 90% wrong in my opinion, because predicting what is going to happen in the next year is hard to do. No matter what you're talking about the weather. I have no idea what the weather is going to be in 1 year's time, let alone 1 week's time. And when it comes to stock picking, I think it's even hard, or maybe even harder when it comes to this, because who knows what's going to happen in the next year to drive individual company share price higher or lower. And that's not even talking about the overall market. We could have a prolonged war in Ukraine, or maybe the conflict expands. We just don't know. At the start of 2020, no one even knew about coronavirus or COVID-19, even though it had just sprung up in China. So predicting what's going to happen in the next year is hard to do. But that doesn't stop companies like Bell Potter producing their stock picks for 2023. And I saw an article that was entitled or titled exactly that. So I had a look at that particular article from Bell Potter, their stock picks for 2023. And to be honest with you, some pretty intriguing picks within that list. And then I had the thought about checking up on Bell Potter's stock picks for 2022 and just seeing how they performed. And that's the whole motivation for this video today, is just looking at Bell Potter's stock picks for 2022. How did they do? And this is that particular article from Bell Potter titled Analysis, Outlook and Stock Picks for 2022, released in December 2021. There is the link at the bottom there. So have a look at for that this particular article. Have a look for their stock picks for 2023. That's out now. I haven't had a look to see if they released one in 2021, 2020. And you probably will find quite a few other organizations releasing their stock picks for 2023. I haven't seen other ones, but there definitely will be some out there. In fact, I might do my own stock picks for 2023. And if I do it, it will be for companies that I do not have currently in my portfolio. So maybe look out for that video. If I do release that video, it'll have to be released within the next 3 or 4 days. Bell Potter does have quite a few analysis in here. At the start of their article, they do go through all the sectors they cover and all of the analysis by name that have made their stock picks within that sector. So you would assume that these analysis are professional and they are experts within these sectors. So just because they are experts doesn't mean necessarily they are going to do a good job in stock picking, because stock picking can be hard, or is hard, even for the professionals. And when I say stock picking, I'm only talking about the next year. So a lot of times you will see analysis pick stocks for a period of time, and it's usually going to be greater than a year. So they're talking about 5 to 10 years, not 1 year, because again, anything can happen in the next year to disrupt and cause chaos to these stock picks. Onto the first sector, banks. Before we have a look at the banks, I should just mention what Bell Potter have done and what that green star means. And then I'll also show you what I have done in relation to sort of, I won't say judging Bell Potter's performance, but just to see how these picks have gone over the past year. Now, when I do show you how these companies have performed over the past year, it's not to the end of the calendar year, December 31st. It's up until the end of Christmas. So I am missing 3 days of trading at the end of the year, because I am recording this video on December the 27th. Now, they have chosen 2 companies here, ANZ and NAB, and they've given a little spiel about why these companies have been chosen, and they also have given a price target. For some other companies, for spec buys, instead of a price target, they have given a valuation. Now, the green star means that at some point during the year, the price target has been achieved. For example, NAB, the price target for Bell Potter was $31, and at some point during the year, NAB share price did get above $31. Now on to the performance of these two companies. ANZ Banking, their price target, or Bell Potter's price target for ANZ was $30. Let's see how ANZ did, down 12.8% and finished at $23.79, well below their price target. Now on to National Australia Bank. You might think, because ANZ is down 12.8%, and typically the banks follow each other with a bit of a premium for Commonwealth Bank, but a lot of times you will see NAB, ANZ, and Westpac have turned being the second best, third best, and fourth best of the four major banks. So you probably would assume that NAB was down for the year, and you would be wrong. In fact, NAB was up 5.3% and closed or finished at $30.38. And at some point during the year, it was above $31. So maybe if you went along with these picks, you might have sold out at NAB once it got above the price target from Bell Potter. Now onto the listed investment companies. And to be fair with you, I'm not that interested in these sort of companies. The other thing you'll notice here is there are no price targets. So I've done a little bit different for these three listed or LICs. For example, for Qualitas, I've mentioned the share price, how much it is down, but I've also included the dividend. So Qualitas share price is down 14.5 cents, but they also provide the shareholders with an 8.9-cent dividend. So it's very important to also not only have a look at the capital loss or gain, but also have a look at the dividends, because I probably would assume a lot of investors in these type of companies invested in these type of companies because of the dividend. Future Generation, FGG. I know nothing about these listed investment companies, and Future Generation Global Investment down 47.5 cents, and they only gave their shareholders a dividend of 6.5 cents. So that was not a good performing LIC during the year. But on the flip side, WAM Alternative Assets, that was actually up 6 cents. Not only was it up 6 cents, they also provided shareholders a dividend of 4 cents for the year. So a nice capital return and also a nice dividend for WAM Alternative Assets shareholders. Agricultural and FMCG. I have no idea what FMCG is. Farming and Costa Group? Who knows? Anyway, Bega Cheese was their first pick within this sector, and I'll probably say right now it's down. And was it down? Yes, 33.3%. Finished the year at $3.78, well below their price target of $6.45. The other two companies they did choose were A2 Milk and Synlait. Fairly similar, well, not similar companies, but they're in that milk sector. So A2 Milk, and this is going to be a little bit of a surprise to some people, was the best performing company that among the Bell Potter picks. In fact, A2 Milk was up 23.6% for the year and finished at $6.75. So again, A2 Milk was the best performing company within this list. And Synlait wasn't quite as good performing as A2 Milk, but it was still up 1.5 cents and finished at $3.29, well below their price target of $4.40. So we have actually one really good performer here in A2 Milk. And some would say that in one particular year, some of the best performing companies would be the worst performing companies in the previous year. So sometimes don't always have to pick the winners in one year and expect those companies will perform the best. Sometimes you can pick the worst performing companies and do really well in the next year because they will rebound in share price. And A2 Milk is a good example of that. Now on to technology. And the three companies I've chosen here, Infomedia, Technology One, and Life360. I really only like one of these companies, and that is Technology One. So let's see how these three companies performed in the last year. Infomedia down 22.9%, finished the year at $1.18, well shy of their price target of $2. Technology One, a company I do want to take a position in. However, the share price hasn't reached my buying price at $10. And right now, it is at $13.31, up 3.9% in the year. So this is a really good performing technology company. Most technology companies, particularly loss-making technology companies, are down significantly over the past year. So Technology One is a really good performing technology company, and that is one of the reasons why I want to take a position in that company, particularly if the share price gets down to $10. And Life 360, an unprofitable tech company. Now, Bell Potter's price target was $16.25. So let's see how Life 360 did during calendar year 2022. Down 47.6%. Finish the year at $5.09, well short of the price target of $16.25. And you might be thinking, this could be the worst performing company among this list. It's nowhere near. And when I say nowhere near, I mean nowhere near the worst performing company in Bell Potter's list. Now on to discretionary, retail, and professional services. Accent Group, City Chic Collective, and if anyone has been following City Chic and knows what's been happening with that business over the year, probably would know that this might be the worst performing company in this list. I'm just saying might be because there might be some worse ones following this. And the last company is Propel Funeral Partners. Propel Funeral Partners and Invacare are two companies I have no interest in, even though it's a very solid business model because they do funerals and that sort of thing. And funerals and death isn't going to go away unless someone solves the curse of death. So if you do have a solution for death, if you can become immortal, I'd love to hear about it. So leave that in the comment section of this video. Otherwise, Propel Funeral Partners is one of those sort of companies that will always have business. Now onto the performance of these three companies. Accent Group down 31.4%. and finish the year at $1.68. Now, I am following this company close because it does look like the sentiment in this company is trying to shift from negative to positive, and that share price well down from the price target of $3.05. Now on to City Chic and the disaster of this company. And I think it would be a good idea to have a look at the commentary on why they have chosen these companies. For instance, right at the bottom of City Chic, they mention here, with this foundation, some sort of foundation here, plus $60 million in net cash available to acquire additional brands, businesses, we believe City Chic is well placed to grow market share globally. So have they done that? Well, no, because the share price is down 91.7% and finish a year well short of their price target. The price target was $7.40, and City Chic share price right now is 45.5 cents. So an absolute disaster or disastrous pick there. Now to Propel Funeral Partners. I will not be shocked if the share price of this company has gone absolutely sideways, down 0.9% and finish the year at $4.39. And this is one of those companies where the share price actually did reach their price target of $5. So maybe you sold out of Propel Funeral Partners at $5 and you would have actually made a profit. Let's have a look at industrials. The company chose three companies here, DDH, which I am following closely now because just like Accent Group, I think the sentiment in that company is trying to turn positive. Calix and Emeco Holdings, I'm not sure why anyone would choose Emeco, so I'm not going to go through their reasonings behind that. But one company here did reach their valuation, not their price target, because Calix is a speculative buy and they do have a valuation of $7.85. But before we get to Calix, let's see how DDH1 Drilling performed. The company I am following, down 19.5%, finished the year at 89 cents, well short of the price target of $1.52. One company that did reach the valuation or price target was Calix. The valuation $7.85, and you would have done fairly well if you sold out at $7.85, and you probably wouldn't be kicking yourself because the share price right now for Calix is down 32% at $4.52. Well, Emeco had a sort of an ambitious price target of $1.55 and finished the year at 77 cents, down 12.5% for the. I'm still quite intrigued about why anyone would choose Emeco Holdings, the sort of company where I think is just going sideways. Not actually sideways. If you do look at the chart of Emeco, it has gone down and it's been going down for a long, long time. So it's one of those companies I've done a little bit of research on, and I have no idea why anyone would choose that company to hold in your portfolio, particularly if you're only choosing 20 companies to have in your portfolio. Emeco is one of those companies I would stay well clear of. So you could be thinking differently. And if you do think differently about Emeco Holdings, please leave your thoughts in the comment section because I want to hear and read different opinions than my own. Now, Bell Potter did pick quite a few industrial companies, and the next three are Money3, BWX, and Ike GPS. Money3 have changed the name. So the ticker code at the start of the year was MNY. The ticker code now is SVR, and I forget what they're called. I'm not sure why they changed the name. And if anyone's been following BWX, you probably would know that also has been a disaster story, just like City Chic. And Ike GPS has done okay this year, if I remember correctly. But anyway, back to Money3 or SVR right now. How has that performed? Down 47.9% and finished the year at $1.85, well short of their price target of $4.35. Now on to BWX. And I'll just go through this commentary. On a look-through basis, we believe BWX is well placed to deliver strong underlying revenue and EBITDA growth in financial year 22. They go on about an acquisition. We believe the market has recently priced in expectations for a soft first half of financial year 22, which represents a compelling buying opportunity at current levels. I'm not sure what the share price was or is compelling, but it's well higher. Well higher. And when I say well higher, I mean well higher than it is right now, because the share price of BWX is down 96.3%, 16 cents. Again, down 96.3%, an absolutely horrendous pick among this list of group of companies. So I'm pretty sure they would want to take this pick back if they could, if they had a time machine. Now on to Ike GPS. This was a spec buy, valuation of $1.25. Finished the year at 84 cents, only down 4%. So Ike GPS has done well over the past year. Relatively speaking, because even though it's down, the overall market is also down. I'm pretty sure the overall market is down, even though it seems like the overall market has been hit a lot this year. Now on to the next three industrials. Kneppy, which is something about education technology. Coventry Group, and that is a company I have owned in the past. The share price is dropping right now because I do follow that company. And DGL, another company I have owned, and then I sold out for a few reasons, including I did not really like the CEO and the founder. And DGL is one of those companies where the price target was hit. That price target was $3, and I am hoping shareholders or previous shareholders did sell out at that price target, because the share price has dropped significantly from that price target. But before we get to DGL, Kneppy, I don't know much about this company. This was a spec buy with a valuation at $1.60. I have a bad feeling about this one. Down 56.7% and finish year at 45.5 cents. I think Kneppy is not profitable, and that's one of the reasons why the share price of this company is down a lot. So even though they are an education company, they're also an education technology company, and unprofitable technology companies have been hit hard in the last calendar year. Onto Coventry Group. This is not a tech company. They own stores and sell stuff. That's all I probably will say right now. So they say Industrial Supply and Services Group. Their price target was $1.90. Finished the year at $1.12, down 32.7%. And now onto DGL. So even though the company did hit the price target, some bad news did see the share price drop a lot. And the share price right now is at $1.50 or $1.49.5, down 52.2% for the year. So not a good group of companies right here, all down by over 32.5%. Now onto healthcare, and three picks here. Kazia Therapeutics, Telix Pharmaceuticals, and Dr. Care Anywhere. I'll be honest with you, I like only one company among this list, and that's Telix Pharmaceuticals. In fact, this is another one of those companies that did hit their valuation, because this is a buy speculative stock. In fact, Kazia Therapeutics is also a speculative buy. Funnily enough, Dr. Care Anywhere is not a speculative buy, yet I would consider that company to be a massive speculative company. So Telix Pharmaceuticals did hit the valuation at $8.30, but the share price for Telix Pharmaceuticals has been quite volatile over the past year. Now onto the performance of these three companies. I know two of them have performed horrendously bad, and those two companies are Kazia Therapeutics, down 94%, and finish a year at 7.5 cents. well below the valuation of $2.40. So if Bell Potter is right, and this company should be valued at $2.40, I'll go in and mortgage my house and lend $2 billion to take a position in Casia Pharmaceuticals, because the share price right now is significantly below their valuation. Now, the other company that did not perform well during the year is not Telix Pharmaceuticals. In fact, it's only down 8% and finished the year at $7.12. And that's because we are starting to see this company produce a lot of revenue and cash, well, not cash flow, but a lot of revenue and receipts, because they are selling their products, and their products are gaining a lot of traction around the world. Now on to the other bad performing company, Dr. Care Anywhere, ticker DOC. That was down 91.7% and finished the year at 5.3 cents. Just like Casia, the price target for this company was well above the current share price. In fact, the price target was $1.30. So just based off that, that's 30 times lower than their price target. I'm hoping no one bought into these two companies based off their Bell Potter's 2022 stock picks, because you would have done horribly bad if you picked those two companies. Onto resources and precious metals. Some interesting choices here. We had a nickel mine, or nickel mines, NIC, Regis Resources, gold company, RRL, and Chalice Mining, CHN. I'm pretty sure Chalice Mining is still an exploration company. And Chalice Mining had a really good calendar year 2021. I'm not exactly sure why they would pick a company that had seen a really good previous year. And I think even 2020 was really good for Chalice Mining. So it's going to be really interesting to see how that company did. Now, I would think nickel mines did fairly well, because nickel prices did go up during the year, and their price target of $1.74 was reached at one point. So let's have a look to see how nickel mines did, down 31.8%. So with the share price decreasing at least from their price target of $1.74 to 98 cents, something bad must have happened to nickel mines. I don't follow that company well to know exactly what caused the share price down 31.8%, when overall nickel prices, I'm pretty sure, did go up for the year. Regis Resources, gold had a fairly volatile ride during the year and is on the upswing right now. And it's up 6.7% for the year, finished the year at $2.08, but still well below Bell Potter's price target at $3.81. Now onto Chalice Mining. Wouldn't be surprised to see this down a fair bit. Their valuation, because this is spec buy, was $11.73, and Chalice down 35.9% and finished the year at $6.15, well below their valuation price. Two interesting choices when we look at the energy sector: Cooper Energy, which is all about gas; Boss Energy, which is all about uranium. Sort of can understand Boss Energy, don't really understand Cooper Energy. I thought there would have been better picks among gas and petroleum and within the energy sector. So let's see how Cooper Energy did. Down 31.4% for the year. Their target price 38 cents, and Cooper Energy finished here at 18 cents. Boss Energy, wouldn't be surprised if this is up or down, because uranium and uranium companies, explorers and producers, have had a volatile year in financial or calendar year 2022. Their speculative valuation price was $3.47, and Boss Energy only down 8% and finished the year at $2.07. And when I do hear fund managers, professionals talk about uranium, Boss Energy is one of those companies that comes up all the time. And because it is quite popular among that segment of investors, it wouldn't be surprising to see that that is one of the best performing uranium companies on the ASX. And the last sector is strategic metals or minerals, and it's not surprising that we have two lithium companies here. I think Liontown Resources is a lithium company. Lake Resources is definitely a lithium exploring company. Well, Alpha HPA is a HPA company. I don't know much about HPA. I've done a little bit of research on this sector or this area about 5 or 6 years ago, and the company I was researching really has done nothing in that last 5 years. But on to the performance of these three companies. But before we get there, two of these companies, Liontown Resources and Lake Resources, both reached their speculative valuation. For Liontown Resources, that valuation was $2.15. However, the share price of not only Liontown Resources but Lake Resources and all other lithium companies have been under pressure over the past month. Liontown Resources down 23.8% and finished the year at $1.26, while Lake Resources, coincidentally enough, is also down 23.8% and finished the year at 77 cents, well shy of the speculative valuation of $1.37, while Alpha HPA was actually up for the year, up 7.5%, finished the year at 64.5 cents, but still shy of the spec buy or spec valuation price at 87 cents. And that's all I have for this video, looking at Bell Potter stock picks for 2022. How did they do? The best performing company was A2 Milk, up only about 23%. The worst performing companies, about 4 or 5 of them, all down over 90% for the year, including City Chic and BWX. BWX down, what was it, 96.5% or something like that. And I'm pretty sure the analysis who picked BWX and City Chic would like those picks back. So if they have invented a time machine, maybe they're going to use that time machine and change the past. If you have any thoughts about any of these picks that Bell Potter did make, or if you have an opinion about Bell Potter, and I don't want anyone to judge Bell Potter harshly because of some of these picks. You're going to see a lot of professionals, a lot of amateurs make bad picks like this when the overall market is down a lot. It's all about the overall portfolio. So some of these analysts who did make a bad pick could have been up for the year because they made some really good picks and they didn't reveal what those good picks were. So if you do have any thoughts, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.